What's up, everybody? Stangam and John here, getting ready to do the weekly recap of week ending February 24th. What a week. Everybody calling for the longs and calls, and we were saying, no, hang on. We got some more business to do to the downside. So we want to do the recap. John, you ready?
Yes, sir.
All right.
You can do the intro though, Dubs. But
What's the intro?
the chart.
Oh, that's fine. That's fine.
Let's start off with the yearly on the daily. Let's do a daily. I want you to pay attention to something on the daily that happens that everybody loses track of. There's a huge gap over here. As you see at the bottom where I highlighted this date is the 17th. Monday was a holiday, it was half a day, and we went right into, on a yearly, we go right into a Tuesday. So that Monday is key, telling us that we literally gap down. We're gapping from that price. Realistically, on a chart, you're not going to see it, but the next day that it starts off, the market starts off on the 21st, telling us that that Monday was kind of a key day for us to see a sell-off to continue. Now, we did have targets down here because of the gap down. We did not hold this area right here and continue the upside, but they created a gap, so the market really has to come back to this area in the near future. Now, I don't know if it does it this week or next week, but we're going to watch it and make sure we keep our eye on this price. Price sold off into Tuesday very aggressively, and it literally continued into the whole day. It was a straight sell-off. I think there was a report that came out at 8:30, and literally we were going for the lows. So on the yearly, we did hit our target that we were expecting right here. By midweek, we did hit it, and once again, we were good. It looked like we were going to bounce, and then we gapped again on Thursday into Friday. Thursday night, we gapped down and came down off the highs, straight sell off into the report, and then we hit our last target for now. We also hit other things on the downside right here, which are the monthly halfbacks based on time. And we do have this 50% here based off of price. That is going to be very important to keep an eye on. Based off price, a lot of people are probably buying here very heavy, but the market doesn't care about price. It only cares about time. This holding up here on the highs and going down into the end of the month down here and holding here, where we know it probably hold itself together, and come back up is very dangerous because a lot of people are probably selling into this market, and that's the power that they're going to need to possibly take out these highs. Remember, the market does not care how it looks on a chart. They only care about time. And that's what's going to be displayed here this week. This is going to be the week that's going to challenge that. And we'll see what happens. Regardless where it heads on the yearly, we play for where it is. We still have targets to the downside. But then we have another key that we never hit this halfback, we didn't hit this halfback. And this high right here was never hit. That's a little indication that we could possibly go up there. And this is that price I was calling for, that 36.50, which I think I did a class with somebody or quick little class about what happens when we don't hit these prices like this.
Yeah, a lot of times they'll come back up there and do like a double top and then come back
probably
down.
come up here very aggressive and then probably come back down here. What I'm assuming is that even though this is a short, this is displaying a short, everybody's heavy short, and the possibility that we didn't hit that high, this is probably going to rocket up here and hit that high, right? And everybody's going to think to the moon, right? And no, it's going to come back down here. So it's going to have this scenario of getting people or come here and hold here, which is even more dangerous because if it holds here, then we're holding the low and we just hit halfback. If we go back to halfback, that is not going to be any resistance right there. I mean, to this high, it's not going to be any resistance. And then we're possibly going to hit that halfback. Like this area right here was supposed to be the sell area into this dip down here, but I think that's why they didn't hit up here. Because now we're doing what? Down to halfback. So where should we go? We held halfback, two-way halfback. So we should be hitting a halfback.
And they're probably waiting on the Stingham line. That's why I was pointing right here at the Stingham line. So we know a pullback should come back to Stingham line because they got to wait. Stingham line's probably going to continue this down move.
So I think if we were to have sold off, we should have gone up there completely and hit that line. And then if we would have hit this line, this halfback would have probably just been like butter. We would have probably been like this. We would probably been like this with that halfback. Hit that halfback, reject it, right? Come up here, and then guess what? Reject here. The key is this price up here. If we get past that price right there, this is what that halfback rejection would have done. Boom, boom, boom. The fact that we left business unattended up here kind of gives us an indication that we're going to go back up to the halfback, hit it, and then come down here and challenge that low. And now in a scenario, you're going to say that this is low, lower low, higher low. And that is a very dangerous play. And the fact that we just hit the halfback of a month and we never hit the low, that means that this going into next month is going to be your low of next month. So if that's the low and we're holding the low, guess where halfback could possibly be? It could possibly come up here to this halfback. And if we get up there, now we're not breaking structure to the downside. We're literally trading back up. But it was a good week. Let's see what else happened on a short time frame. That's the yearly, and that's what we expect. That scenario, regardless setup, and we traded from what it's doing, not where it's going on the daily. But
Yep.
keep that in mind.
Cannot stress that enough. Guys, we're day traders. That's why we use the ranges that we use. We set up for the next day always.
And we don't care if price is down, or whatever. When time comes, if that play goes long, you're gonna go long. You're gonna hit a target, and you're gonna get paid. That's what matters. So you can't be biased with what the market is doing. I show you charts of what it does when they do these types of sell-offs for a reason. So you don't have that bias. When you become biased, you could literally lose money because you're gonna get into plays because of you thinking what it's doing and not really what it's gonna do. So when you start thinking what it's gonna do in your mind and what the market's really doing, that's the worst thing. All right, so on the weekly, like I said, this is our half day on Monday. And as you see, we have a gap. There's a gap up here, unfilled period. And look where it left it. It left it all the way at the high. We literally have a gap up here. This is the 30-minute candle, but this whole day was not accounted for, period. When we open on the 18th, on 1800 on the Tuesday, somewhere around here.
Eastern time. John's talking Eastern time, guys. 1800.
We literally sold off, and this is complete sell-off. We went sideways until midnight, and then once we literally just opened at midnight, they were sold. Now here they had a report into London, but we really don't care about the report. The PMI was out, and that's what they're gonna blame the market on, that PMI. But as soon as we got down, you already know that once we went past a certain price, over 10 points, you forget it. Like, this is something, this was complete sell-off. But even if you take the gap from this price and you say that we're gapped up here, look how far down we were when we opened. Literally 18 points from this gap. So this is not even displayed on the yearly. So, but we trade this, and then this time frame right here, we did sell off right here into midnight. If we're looking for a play to continue to the downside, remember, do not be biased in Asia. If Asia's at the lows, we're buying still. But what happens after midnight, just like it did on Thursday, after midnight, it sold off. There's keys to that.
Well, it was that halfback. So we got a high, we got a low, and this was halfback.
Right into midnight. So midnight,
right at clock.
Yep. It just sold off. And if
so when I say where's price at clock, you have three choices. Two of them are wrong. One of them's correct.
Halfback. So if we're rejecting halfback and we're not above halfback, we're not going to the highs, we're going to the lows.
Where's price? Where's price? It's not here, and it's not here. That's all you need to know.
So into midnight, we weren't above that halfback. So guess where it's going? To the low side. And then a continued trend. Same thing for London's closing.
What's target? Sweep. Sweep to that low.
Nope.
Then target. Sweep. And then it comes back up. Look, it retests. This is exactly everything that I show you guys. This is retest, and then what does it do? Target.
Same thing on Monday. I mean, into London's range right here. This is London close. It pops up and it sells off. 1300 candle sells off, pops up, and then into the close. That's it. Now remember, after 1500, which is for some people 1400 Eastern, I mean Central Time, we do not trade past that candle. And the reason we don't trade that is that hedges and all that have to close their position, so the market might pop back up. Now that's the indication of why we use the London close range, because that 1545 candle is going to tell us the high and the low. So if it's meant to go higher, we're going to break up to the top side. But if we're going to break to the downside, we're going to break down. And that's a good indication that we here we didn't hit the high. So that was another. And then going into from Monday to Tuesday, remember that was the holiday, so Tuesday was a complete sell-off. Wednesday we kind of continued the same trend into the in Asia we shot up right into midnight. Now we hit midnight, then we come back down off the highs to the lows. There was another report that was coming into Wednesday. There was another inflation report, and as they see, they buy it up to go to the highs. And they had the Fed meeting, I think, on Wednesday as well. There was an inflation report and the Fed meeting. Um, Both retail sales were good, and they shot it up because that's what they do into the report, right? And then they shot it up into the minutes. And then after the minutes, they sold it off. Look how they sold it off, right to our target. This was one of the second targets we had on the yearly on the way down, and it hit, right? And then when they closed off 1500, the market shoots right back up into Asia close. And this is another report coming out onto the Thursday. So we got to be mindful of those reports. And that's why you can't be biased for your short to be short. This actually broke out from the range into the open. It was a long. And literally, we almost hit that target that I was talking about on the yearly that we did not hit, which is a kind of key that we might return. Then what did New York do? Sold it completely off. And then we went below target. What happens down here? This is another reason not to be biased of this play downward. I tell you, wait, if you missed this play, look how fast it came down, right? And some people will say, oh, there was big option sales, whatever. I don't care. If you do the range of London close, you will see that London close was actually a buy. It was not a sell, right? 1300 was actually a buy, not a sell. What we teach is that. Now, this got out of range completely. And going into Asia, it was still a buy. And it was a buy twice here into when? Midnight. So the fact that we came up here, and if you did your setup completely right, yes. And if you did your setup completely right, we did wick here and hit the London close range, the same high from the range from Wednesday. But Wednesday's range, we hit here and went under. Here, went under. Here, and we went under. That is literally 3 London close range topside, and we can't get above it. So into midnight, there was a big sell here. Into a report here, they sold off. And like I showed during the week, that these reports, when they sell off, what does price have to do? It has to fix itself, just like this quick sell-off. And this quick sell-off, what did price do? It went back to fix itself because they sell it off too aggressively. Here it hit a target, so it was even more. When I hit this target, this is the reason I think that we're headed to the top side. This is literally a price that once we went above 12 right here, we should have hit that high. The fact that we didn't hit there, I think we're returning back there. And the fact that we have this gap, once we get to this scenario, all they have is time to get it up there. It's telling us a story, an underlying story. You don't have to worry about that. All you have to worry about setting up and trading the time that you're trading and setting up at that time. If you're trading Asia, I said it this week again, Asia is very easy. This was easy money. You got at least 8 points on this play right here. And then you got 5 points on the next play at 2100. After midnight, that play is completely done. So if you held for the top target and we didn't hit, after midnight, once we broke that halfback and we broke that low, and the 151 to the downside for our Asia setup, you will see that this was going to be selling off. Now, do you get this whole move into report? No, possibly not. You know, you maybe get out before the report, but you do get back here. And we got to London close range. We got to a lot of things over here. The trade was short. You could have got 5 to 10 points very easily here. And then what do I say after that? Because this is already 5 a.m. And then we're going into New York's play. Wait for time. And then when New York opened, display the sell to go hit the range of London close at the bottom. So
if you guys don't listen to anything that we're saying right now, 5 to 10 points. Listen to me. And 5 to 10 points. This right here, don't let this, don't get confused of this whole move.
No, you can't, you're not
5 to 10 points. That's all you're looking for. That's all
you're gonna lose sleep trying to see us play every day, and this play will happen 100 times.
Because right here, I'm gonna show you what could have happened. This is halfback right here. And it could have went this way right here.
Yep, into that
That's report. Why we take the 5 to 10 points.
Yep, into that report, it holds there and it goes up. And realistically, all that did was that move right there when it remember displaying on a yearly price is what retail is going to buy. They were probably buying very heavy underneath there. And what did they end up doing? They ended up taking them out because they trade price. We don't care about the whole numbers. We don't care about certain prices. We don't care about resistance and support. We literally do what it's doing at the time. We take our 5 to 10 points, and if the market goes there, good. You know what I mean? It just tells us that we're moving in that direction, higher or lower.
Or volume. I don't care about volume. Get your volume off the charts. Get it off the charts.
All it's going to do is confuse you.
Yep. Get the volume off the charts.
So at the lows right here, you know, I said that we're going to go up to 85. We got very close, and I think this is the week I actually missed targets by 1 point or 2 points. But the thing about those targets is that you should already be out of your play when you're up 15 or 20 points. You know? Yep. So if you're up 15 or 20 points and we got a target at 85, that should be your runner. If we didn't hit 36.50, your runner should have been going for 36.50. But once it's indicated like, oh, we're going back to a low, like coming down, and you see these candles take out like a whole body of a candle like this, and we're below a low, you better believe that last runner is done. Get out, close it out. We didn't hit. If it hits, it hits. If it didn't, you get out. But you're not taking the plays all the way to these targets. You're taking them as I'm gonna get my 5 to 10 points, and that's it, right? And then if you get to that skill set where you can hold a runner, you know, longer, then cool, that's good. But 5 to 10 points, get your targets, and then leave a runner on there. But that's when you'll start adding contracts where you can do that, because you're going to start looking at your P&L and it's going to start bothering you. But then that's why when you get comfortable with that runner, you don't care because you already made your money. So even if you took a loss, you're not losing any. You know?
And guys, I'm not doing anything that we're not telling you.
No,
I'm doing exactly what I'm saying to do. I'm only looking for 5 to 10 points on the play. Usually I'm only taking one trade a day. Y'all see what I did this last week. I actually do what I show you to do. That's the process.
All right, so let's start this is our setup for Sunday. This buy area. Let me remove that. All right. So this is our play for Sunday. Like you see, I don't have any prices on here. It doesn't matter where we're at. The only thing that matters is the setup. Now you see, I do have the fibs on here, right? I have all the fibs on our candle, right? We have our halfback of London close range, and it's literally our 1545 candle for my time frame, Eastern, is literally at London close range. So, you know, if we hold here.
So what does that mean? What does that that's a clue. That means we're actually going to be using London close range, more than likely.
Yeah, so we'll probably come down, dip down, or we could just go up. So whatever it does at time matters. If it comes down, then we're going to look for possibly a move up if it indicates a move up. Now we start breaking down and start coming down, we're going to go with that flow. We're not going to change our direction. But if we're going up, then we got our targets up here and our highs. So remember, Where are we when we open? If we come down, we're at low. Are we looking?
Stingham line.
You
Keep eye
know,
on that
we're
Stingham line.
looking to
That's
sell
the
down.
magnet.
We're not looking to sell down here because this is the low. Now we break down from this low, then we're looking to sell to where? To down here because this will be our high. This will be our low that we got to go to. So in that case, it'll be like that. But right now, if we open and we come down here, this is going to be our low until something tells us different. And then if we come up, this is our target right now. This is the box that we're playing in right here. Now we have to take in consideration, are we going all the way to 151 or are we going to London close range high? So that's another thing that you have to be
That's why I said I think the London close range is what we're going to be playing going into Sunday night.
Exactly, because we could literally, so we could do one of these, we could just shoot up,
It
right?
could come down here too, and then
Yeah, or vice versa, go like that. Or we could like go down and then pop up.
yep.
So that scenario is very it depends on what it does at times. So you know how to I showed you people how to set up.
But rotation is high, low. Where we at clock? We're at halfback. So if we got a high, we got a low, and we're at halfback, we should already be expecting a pullback. They may even come down here and sweep this low. It may not. Remember, I say be the wick. I mean,
it could just wick down.
It could be right in here.
Now, if we gap, that's another thing. The gap, if we gap down and we go above that gap, it's going up. Period.
Yep.
And if we gap and we don't get above that gap, it's going down to the bottom side. So if we gap and we can't get above that gap, we're more likely.
Now we did drop, so we could gap down the Stingham line.
Yeah,
we could gap down the Stingham line and then them freaking buy it up, close the gap. We got a runner.
Yeah, but
at that point,
like at this point right here, you can't tell anything, so it doesn't. So when it's time to take this trade, you're gonna see an entry, but you have to wait for it. Like if you wait for it, you're gonna see it.
So what I see this right here. This is what I see. Yeah. We're at halfback right now.
Yep, and
that's our line. So if that's our line, we know if price gets above here, we're going long. We know if it goes below here,
London close high is going to be our target. So if it goes up in wicks, you better have an order at a little bit less than that price.
Because right here's our targets.
Yeah.
Low, if it's a short, right here, high is our target.
And another thing is that a lot of people are putting these fibs on their charts. There's a lot of lines on this chart. Go and mark them. Change the color of, you see my colors on all my lines are different. Identify what those lines are. Start writing on your chart. Remember, over here doesn't play until midnight. So I literally put a 151 so I can identify it when I'm trading. And here I put 151, right? And then I make sure I know, hey, this is halfback. Trust me, it's very easy to get lost when you're not used to stuff. So right there, boom, and change the colors. This is my colors for the London range. Sometimes I'll do it like this, and you see on my chart, they're solid. And then for my longer time frames, they're like pinkish. I make sure I remember that because the setup is what you're gonna constantly be doing. The setup is gonna be important. And then I showed some people that this range goes into London. Okay, so if you keep an eye on this, it does go into London. Into London and New York. So we could have this go down, come up, and then we're breaking above here. If we're breaking above here into London, we're breaking out.
Right. Let's explain that. So our area 51s is our breakout lines. So what does that mean? That means if price gets above here, we're breaking out to the top. If price gets below here, we're breaking out to the bottom. And what I mean by breaking out, it's got to hold. So just like this, we test and we hold.
Yeah, if you set up for London into Thursday and you put this setup on that day, going into London into Friday, you see that we wicked. London went underneath, wicked up there, hit that price of 151, and went straight down like a rocket. So if you put it on a chart, set up, and start seeing it, you start realizing that all this works together. This is your breakout. Remember, I always say that Dobbs always gets the low price or the high price because he trades Asian. and he stays up, so he plays this. And then after midnight, he's good because that's your confirmation to say that, hey, like he showed you right now, high, low, half bet. And what's the rest? Is it going to come back to the high? Absolutely not, because at that point you're breaking out. If you broke the 151, so you're literally in a breakout. All right, Dobbs, that's all we covered. A nice week this week. Everybody was posting good P&Ls. We did some group classes this morning. We have another class tomorrow morning. Um, and then we're excited because I think next month we're rolling out the other package, right, on Ninja Trader. Hopefully.
Hopefully we'll get that ball rolling.
Yeah, that's literally doing this setup.
Takes money to do everything, guys. So
yeah, we're slowly getting where we want to get with this, and it'll be better because it does that automatically. But
I do want to give an update on the live stream though. We're probably going to have to upgrade the server. So I've already put in an upgrade ticket. So I'm not real sure if that's going to get done by Sunday or Monday, because I'm not sure if they work on the weekend. But I did put in a ticket this morning to upgrade the server to beef it up. So we think that's what the problem is. So if it's not running, I will run a backup. So no problem there. I'll make sure there's a backup screen running.
all right, that's about it. Nice week. We're coming up on actually the second month, finishing up second month. Let's go into March and see what we do. Let's do it again. Every
Yes,
day,
sir.
every day is a good day.
Yep.
All right,
All
Doc.
right, guys.
Later, guys.
Hope y'all killed it this week, and look forward to trading this week. Set up, set up.
Set up.